If you have a child in private school here in the UK, or you're even just thinking about it, you're going to want to listen up. We're about to unpack the single biggest financial change to hit private education in a generation, VAT on school fees. And this entire guide has been developed by the experts at My Tax Accountant to give you a clear path forward.
My Tax Accountant are the folks who live and breathe this stuff. They're specialists in navigating the tangled web of the UK tax system, and they've put together this breakdown to help families just like yours understand what's coming and, more importantly, what you can actually do about it. Okay, let's dive in.
So what's the big headline here? It's this: a massive 20% hike in private school fees kicking in from 2025. This isn't a small tweak. It's a huge shift, and you need to start planning for it, well, yesterday.
So here's how we're going to break it all down for you. We'll start with the shock itself, what's happening and why. Then we'll look at the very real impact on families. After that, we get to the good stuff, the solutions. We're talking trusts, smart savings, and even what the schools themselves are doing. And we'll wrap it all up with a clear action plan you can start using today.
All right, let's get right to the heart of it. Section 1, the 20% school fees shock. What is this change really, and why on earth has the government decided to introduce it now?
The core of this change is pretty simple. It's all about value-added tax, or VAT. We're talking the standard 20% rate being slapped onto private school tuition and boarding fees. For years, these services have been exempt. It was a huge tax break. But from January 2025, that safety net is gone.
So you might be asking, why now? Well, the government's got a couple of big reasons. First, it's about money. They reckon this will pull in an extra £1.8 billion a year. Second, it's about social equity. The plan is to funnel that cash directly into the state school system, funding things like 6,500 new teachers and better facilities for the 94% of kids in state education.
Okay, let's talk dates, because this is where it gets really important. A key date has already passed. On July 29, 2024, these things called anti-forestalling rules came in. In plain English, that means any fees you paid after that date for the 2025 school year could be liable for VAT. The loophole for paying years in advance? Yeah, that's pretty much closed. The official start is January 1st, 2025. But remember, HMRC can investigate for years after the fact, so getting this right from the start is crucial.
And that leads me to this really crucial warning. Those fee-in-advance schemes that a lot of people were looking into, they're now under a massive HMRC microscope. They are actively hunting for arrangements that look like they were set up purely to dodge the tax. This makes proactive, legitimate planning more important than ever.
Okay, so we've got the what and the why, but what does this actually mean for your bank account? Let's dig into the real-world impact this is going to have on families across the country.
Let's just put a number on it to make it real. The average private day school fee in the UK is about £15,200 a year. Add 20%, that's an extra £3,040 per child, per year. If you've got 2 or 3 kids in private school, that number suddenly becomes a massive and for many a completely unsustainable new cost. This chart really paints a picture, doesn't it? You can see state school funding per pupil over here at about £8,000. The average private fee is already double that, but once you add VAT, it jumps way up to over £18,000 a year. It just shows you the sheer scale of this financial challenge. Now, this kind of financial squeeze is obviously going to have a knock-on effect. Projections suggest we could see a drop in enrollment of between 3 and 7%. Now, that might not sound like a huge number, but it translates to between 20,000 and 40,000 students moving from the private sector into the state system, which would create a whole new set of pressures. And look, this isn't just theory. A recent survey found that a staggering 26% of parents, that's more than a quarter, said they would have to withdraw their children if VAT was introduced. That shows you the level of anxiety this is causing. But listen, stay with me. The next part is all about solutions.
Okay, enough about the problem. Let's start talking solutions. And we're going to kick off with one of the most powerful long-term tools in the box, using trusts to plan for school fees.
So, what on earth is a trust in this situation? Let's keep it simple. Think of it as a legal safe where you can put assets, like cash or investments, and lock them away for a specific purpose. In this case, your child's education. It's all managed by trustees, that could be you or a grandparent, to fund their schooling in a really tax-smart way.
Right. There are mainly 2 flavors you need to know about: bare trusts and discretionary trusts. A bare trust is simple. The money belongs to the child, so any income is taxed at their rate, which is usually 0. The catch? They get full control at 18. A discretionary trust, on the other hand, gives the trustees, that's you, much more control over how the money is distributed. But that flexibility comes with higher tax rates. Now, this next bit might seem a little technical, but it is one of the most powerful strategies out there. And here is a fantastic pro tip that makes bare trusts so appealing. For the 2025/26 tax year, every child has their own personal tax allowance of £12,570. This means a bare trust can generate up to that amount in income every single year, completely tax-free, which you can then use to pay for school fees. It's an incredible way to make your money work so much harder for you.
Trusts are brilliant, for sure, but they're not the only tool in the shed. Let's look at some other tax-efficient ways you can save and gift to help lighten the load. So you've got a few great options here. There are junior ISAs or JISAs, which are a fantastic way to save for a child tax-free. Adults can use their own stocks and shares ISAs to build up a dedicated education pot. You can even get grandparents involved through things like their pension drawdowns. And of course, don't forget the annual gift exemption for inheritance tax planning. Let's zero in on junior ISAs for a sec. For the 2025/26 tax year, you can tuck away up to a cool £9,000. And the beauty is, any growth on that money is completely free of tax. It's a simple but seriously effective way to build that education fund.
And don't sleep on your own ISA allowance. You've got a generous £20,000 a year you can put into a stocks and shares ISA. And who says it has to be for your retirement? You can absolutely use this to build a separate tax-free war chest specifically for your kids' school fees.
Here's another really clever strategy, and it's all about charitable giving. Because most private schools are charities, you can use gift aid. Let's say you donate £100 to the school's bursary fund. The school, being a charity, gets to claim back £25 from the government, turning your donation into £125. But here's the kicker for you. If you're a higher rate taxpayer, you can personally claim back an extra £25 on your tax return. It's a genuine win-win.
Right. It's not just families scrambling to figure this out. The schools themselves are on the front line of this change, and they're working hard on strategies to cope. So, what can you expect from them?
Schools are getting creative. They're looking at a whole bunch of things, like tiered fee systems, expanding their bursary programs through fundraising, and even partnering with state schools to share costs. Some are even exploring the nuclear option, converting to an academy, which would make them state-funded and therefore VAT exempt.
But let's be realistic. Not all schools are created equal. For the big, famous institutions with deep pockets, this will be a challenge, but they'll manage. For the smaller, independent schools with tighter budgets, this could be really tough. We could honestly see a wave of closures and mergers in the coming years. So this all leads to a really important question for you. What is your child's school doing to prepare? Have you spoken to them? It's time to open up that conversation. Ask about their strategy, find out about bursaries, and understand what support they plan to offer. You need to be proactive.
Okay, we've covered a lot of ground. The problem, the impact, and the solutions from every angle. So let's boil it all down into a clear, step-by-step action plan that you can start using the moment this is over.
So, what should you do right now? 5 simple steps. 1. Do a deep dive into your own budget. Know exactly what this 20% hit will feel like. 2. Get on the phone with your school. Find out what their plan is. 3. Max out those ISAs, your child's and your own. It's the simplest tax-free win. 4. Seriously look into whether trusts or strategic gifting could work for your family, especially if grandparents want to help. And 5, and honestly, this is the big one, talk to a professional. And really, it all comes down to this. If you're committed to private education, just paying the fees as they come is no longer enough. Proactive tax planning isn't just a nice-to-have anymore, it's absolutely essential to managing these new costs.
Okay, now for a very important bit of housekeeping. Please remember, the information we've shared here today is for general guidance only. It is not a substitute for proper, professional advice that is tailored to your specific financial circumstances.
So before you make any big decisions, please talk to an expert. For that personalized advice on school fees or any other tax issues, get in touch with the team at My Tax Accountant. The number is 0208 570 8531, or you can email them at info@mytaxaccountant.co.uk.
And if you want to go over all of this again in your own time, My Tax Accountant has a fantastic detailed article covering everything on their blog. You can find it at mytaxaccountant.co.uk/post/VAT on private school fees.
And finally, if you found this helpful, please don't forget to subscribe to the channel for more updates and clear tax tips just like this one. It really helps us out.
So I'll leave you with this final thought to chew on. With costs about to jump by a fifth, is your financial plan for your child's future really strong enough to weather the storm? If there's any doubt at all, now is the time to find out. Thanks for joining me.